Hi, Jedi traders. It's Mr. Ed back again. I wanted to show you some of the stuff that, some of the price action today in the ES. It was a kind of a difficult and frustrating day for the ES um, for some people. Um, I know that there was a lot of folks this morning that was calling for a short in the ES. I didn't think it was going to short today, and a couple of reasons why was because if you look at this area here, it was all consolidation from midnight. From midnight on, it was just consolidation, consolidation, consolidation right here. We had what came out to be, what's that, a triple bottom down here on the ES. The Asian low was down here, London low was down here. So the market's basically trying to retest these levels down here and retest and retest and retest and can't break it because the buyers are coming in and they're not going to let them sell it off. So this area today was our support zone, and you can see that cyan line, and that's backed up by the Murray Math lines. Murray Math lines right around 2373 was the bottom of support, and we almost got down there, but we didn't quite make it. So I didn't think it was going to be a short day in the market. So what I did was I allowed the automation to get in. The automation didn't get me in down here, but this is where I normally would have gotten in at right at support, at the top of support. Put my stop loss at one tick below the bottom of support. So it would have gotten me in long at 23.75 and a sell stop of 70 and my my stop loss at 72.75. My initial target was 90.75. And I'll show you something interesting about the Murray Math lines, that they did shift a little bit today after I was in the trade and basically well into the afternoon. The Murray Math line shifted a little bit. And here's why that's a good thing. And I'll show you this here in a second. So going to hit play. We'll go through. You'll see where price action will grab this guy. We'll fill for the long. Yeah, let me speed that up a little bit. You'll see where it'll get in for the long here in a minute. And this was, about 5 o'clock in the morning. And the automation got me into the trade this morning, and I wasn't even awake. I just let it fly. So here's my long signal right down here. My stop is down here. I'm just gonna, just leave that in place. And it's not a bad idea to leave it in place, and I'll show you why here in a second. I know a lot of people preach the mantra of move your stop loss, to break even as soon as you possibly can. And I'm going to show you why sometimes that's a really bad idea. And I'll show you here in a minute. So price action's moving up, price action's moving up. From all the consolidation here, I figured, this is going to be kind of a choppy day. Everybody's expecting the market to short, and we're going long here. Obviously going long. Look at it going up. Penetrated the 89 EMA. We had moving average crossover here, which basically, or actually right there, which basically said, get into the long trade. Moving average crossover to the upside, 89 EMA. A pullback. You'll see the pullback to the 89 EMA there. I like for it to go a little bit more past the 89 and then pull back to the 89 before I get into the long. Sometimes I don't have a choice, but the Murray Math levels right here supported the idea that this is support. It's a support zone down here. So you can see here's where the market goes. So we're already up 18. We're already up 18, 19 ticks. 23.79.75. So the long trade, even though it's a little bit of a counter trend trade in terms of all of this coming down, it worked out because we're just bouncing off support here. And if I'd gotten, if I gotten stopped out, I'm going to move my stop loss down here. I'm going to keep it down here. And I usually do until I get to the major support resistance line. Once I get to major support resistance, I will move my stop to like break even +1 or break even +2 to to make sure that this thing, because once it comes up here, it very rarely comes back down and takes me out. So I'm pretty safe making this a no loss trade up here, and then shooting for my target upside. Now I'm going to speed this up a little bit. Let's go through the day because it's only 7:30 in the morning. You'll notice, and this is why I keep that stop loss back a little bit. You'll see here in a minute. We had a real nice deep pullback, and it would have taken you out of the trade unless you'd have gotten in, unless you'd have gotten out somewhere up here, 2380, for example. You'll see all those buying contracts come in, and then the market had a really nice pullback, which that probably stung those guys that were going long there a little bit. But now you see a bunch of stuff coming in the market. You see a bunch of chop. Let me pause it right here. See a bunch of junk up here. You see the battle between the buyers and the sellers. Here's some sellers, but there's still buyers coming to the market, so they're still battling it out. Okay. Now we see the Murray Math lines shift a little bit. Now they shift down. So they shift down. What I'm going to do is I'm going to move my stop loss, or I'm going to move my target down here up to, to 2386. And I know that there's some people out there watching this going, well, why are you going to move the stop loss? Why are you going to move your target down? I mean, why not keep it up here? The reason why is there's a reason why the Murray Math line shifted, and the reason why was because all this consolidation, all this choppy, it's in a fairly tight range. So the Murray Math lines they automatically recalculate themselves and narrow up to give you a nice, a nicer trade, or not a nicer trade, but a nicer range to trade in. So I'm still not touching my stop loss. It's still down here. I'm still in the trade, but see now support has moved up there, and then it just moved down and it just recalculated. So I've got a nice small stop loss right there. Now see where that puppy came back, and I could see all these guys that were long way up here. They just either they got out or they lost a lot of money doing this. You see where that pulled back. So if you would have moved your stop loss to actually to break even, it came up and touched, it would have taken you out right there, out of that trade. If you'd have moved your if you'd have walked your stop loss up, it would have taken you out of the trade. And that sometimes happens. And that's one of the reasons I like to keep my stop loss back. So, okay, we came down to 2374.25. Where have we seen those levels before? Right down here. There's 2374, 2373.75, 2373.75. So, what that basically means is the market is, they're trying to sell it off back down to that level. But it didn't take out my stop loss. So, and that's what I was worried about. Like I said, I do not like to move my stop loss to break even, just to give the trades a little bit of room to breathe until I hit my target. Okay, now they've shifted down 2382.75. So, let's I'm going to move my target up there, and I'm going to go. Let me see. I'm going to slow this down just a little bit. Here we go. We're going to go to play, and you can see where stuff came back up, came back to the pivot, then came back down, and it was a very, very, very choppy day. You'll notice that price action would come up to the 89 EMA and then kind of pop back down and try to fake a bunch of people out. See right there, I just got a short signal there, which I'm not gonna let this thing take me out of this trade. If I get stopped out, I get stopped out, but I'm convinced the market is going to move a little more than just this. It's already hit my major support resistance line right there. but those have shifted down. So I'm very careful about this, about moving that thing. So here we go. We're going now. We're fiddling around at this support level. See, the support level firmed up a little bit, but we're still, we're still fiddling down right around here. But I'm still sitting pretty good. It's 23.75. I mean, that's not a bad entry for that trade. So let's see. We're coming up on noon. We're going to fiddle around for quite a while here, and we'll just sit here and sit here and watch for a little bit and see what happens. See, the price action was just very, very choppy today, and you can see it if you sat through all this stuff today. But I'm leaving my my stuff in place. It's 115, 117. Price action is just very range bound and very choppy today, giving a lot of false signals, a lot of weird signals. This is where patience. Sometimes trading the market, especially trading the ES, you gotta have patience. You gotta stick in the trade and stick to your guns and say, you know what, I know from months of watching these Murray math lines that even though it shifted down, that price action is gonna hit that 82.75 level. I know it's gonna hit it. I just don't know when. So sit back and just sit back and watch and wait for the trade. We're coming up on 245. More consolidation. See more buyers come into the market. But see, they have a very hard time. They just had they had this triple top right at 23.81, 23.81.25, 23.81.25. That triple top, they're very range bound here, but the buyers are trying to buy it up. Here we go. 23.82, and that was at 338, 23.82. Finally got filled, but that was a 31 tick trade. Once it got up into this resistance zone, since it was so range bound and so choppy, I didn't think it was going to go past it, and in fact it didn't. So it came back down to the top of the range, and it just kind of chopped here, and then after the end of the day sold off. But anyway, a very difficult day to trade. This was the day. Here we go. This was a day for patience.